The Chancellor announced a surcharge of 2% on overseas buyers due to come in next April. So we are now in a position where if you buy before next April, you get to benefit from this stamp duty holiday, saving you up to £15,000 or 3%, and you avoid the 2% that's going to come in next April. So literally buying in March 2021 could save you 5% compared to buying in April 2021.
Hi, David here from Swan Capital Europe. This week we've got a special video for expats and internationals in Europe that either own a property in the UK or are considering buying one. There have been some recent changes announced in the last week, and to discuss these I'm very pleased to be introduced and joined by Rob Gill, Managing Director of Altura Mortgage Finance based in London. Like Swan Capital, Altura is a specialist in the international community. Hi Rob, it's a pleasure to welcome you to the video chat today. How are you doing?
I'm very well, David. Pleasure to be joining you.
Yeah, thanks very much. Can you tell us a bit about Altura and then explain perhaps what's gone on there in the last week and the announcements from the Chancellor?
Sure. Well, Altura is an FCA regulated mortgage brokers here in the UK, based in the City of London. And obviously these days we're very flexible. And amongst other things, we look after expats. We've deliberately built a business model to be able to service expats and overseas residents who do face some unique challenges when it comes to securing finance on UK property, the main one of which it has been abandoned by the major lenders. That was probably about 7 or 8 years ago that they really pulled out of that market due to the crisis we had back then. And it's become the preserve of smaller lenders, building societies, challenger banks, private banks, which are very hard for overseas residents to access. So with us being based in the UK and with my experience of 15 years or so in mortgage broking in the UK, we're able to access those lenders and help expats and overseas residents secure finance on UK property.
Excellent. Sounds good for people living here.
Hopefully, yes.
Yeah, indeed. So tell me about the changes or the announcements that came through last week.
So last week, our new Chancellor, Rishi Sunak, announced a raft of measures, eye-catching measures, one of which was to increase the nil rate threshold on stamp duty to £500,000, increasing it to mean that if you're buying at £500,000, you can now save up to 3%, which is £15,000. So it's very useful for the market. It's created a real flurry of activity, and it affects everyone. It isn't just for first-time buyers or home movers. It affects people who are purchasing buy-to-lets. It's across the board. So a substantial saving. It has generated a huge amount of interest from all areas of the market. And it is due to expire next April. It's called a holiday. It is due to be temporary. Time will tell whether he is able to keep it temporary. It's far easier to introduce these measures than withdraw them. But up until then, at least, there is substantial discount on stamp duty to be enjoyed by anyone in the UK buying property.
That is interesting, isn't it? And so if there's people here living in Europe who are thinking about buying property in the UK, this could be something that maybe spurs them along a little bit, notwithstanding everything else going on.
Quite right, quite right. And the other side of the coin is that before lockdown, before we were really all concerned about coronavirus, at least here in the UK, the Chancellor announced a surcharge of 2% on overseas buyers due to come in next April. So we are now in a position where if you buy before next April, you get to benefit from the stamp duty holiday, saving you up to £15,000 or 3%, and you avoid the 2% that's going to come in next April. So literally buying in March 2021 could save you 5% compared to buying in April 2021. And we're beginning to see a lot of buyers position themselves to make sure that they do buy before next April to avoid what could be an extra 5% stamp duty if they don't do so.
It's quite substantial, isn't it?
It is indeed.
Really. The other interesting factor from our perspective, as well as I'm sure yours, is interest rates. We're looking at inflation and interest rates very closely here, and our feeling is that with the vast volumes of money that were pumped into the economy in the first part of this year in response to the market downturn, that there has to be pressure on interest rates. We know the ECB in Europe and most central banks like to keep inflation between that 2 and 3%. We do feel that it will push towards that upper range. So the question really is, what do you think this means for people with property in the UK holding mortgages, or people thinking about buying in the UK?
Well, we've been monitoring this very closely across the mortgage industry since base rate dropped to record lows as they were then in March 2009. There was lots of talk about when they're going to go up, they must go up, and it didn't happen. So I think we've gone through this before. We've gone through what at the time seemed like huge amounts of QE, a brand new phenomenon. It must lead to inflation. It must cause interest rates to go up. But for a number of reasons, that didn't happen. The first one was inflation certainly never really spiked. I think it got to a high of about 5.2% post that period, which was too high. But it never reached the double-digit numbers that meant that the monetary authorities really had no choice but to take action. Secondly, they decided to look through the inflation, as the saying goes. They regarded it as temporary, so they effectively ignored it. They did not increase interest rates to try and bring it down. They just let it ride out, and they were proved correct, I suppose, especially what happened in 2016 with Brexit. And that third reason is Brexit. I think we have a huge amount of disruption from coronavirus. We've already had quite a bit of disruption from the chaotic Brexit planning or lack of planning here in the UK, and that doesn't look like it's getting any better anytime soon. The press in the UK at the moment is full of a lorry park in Kent that has been revealed sort of secretly by the government authorities down in Kent. And today the headlines are all about a cost of up to £17 billion a year that British businesses could face in terms of fulfilling customs declarations and paperwork if we end up with a no-deal Brexit. So that doesn't seem like it's going away anytime soon. I don't expect interest rates to rise in the UK anytime soon either.
Interesting, thanks. And so Brexit is getting closer to leaving day, and whatever anyone's position is, it is probably another trigger for reviewing their investments generally in relation to what they have in the UK. So do you think this is an impactor on the property market, and what would you suggest someone does who holds a property there now or is thinking about buying one in relation to the imminent Brexit?
That's a very good question. I mean, Brexit has been so uncertain for what seems like forever now, since 2016. It's going to sound like an odd thing to say, maybe, but ignore it. Carry on investing in London if you believe it's a good long-term play. There'll be short-term fluctuations. There'll be nervousness. There may be opportunities for people to buy. As I've already said, I don't think it will allow interest rates to rise anytime quickly. So if you're feeling confident about the long-term prospect for the UK, for London, or wherever it is you're looking to buy, then that is a reason to buy property. You don't dip in and out of property, even without paying substantial amounts of stamp duty. It's still an expensive transaction. It's still something that you want to hold for 5, 10 years, 15 years plus. So if you believe in the long-term prospects of the UK, then try and use Brexit as an opportunity. You'll get some benefit from exchange rates. You still have very low interest rates. You may be able to get a deal on a property as others become nervous or sellers become nervous. So if you believe in the UK as a long-term prospect, then try and use Brexit as an opportunity.
Okay. That's a good point. That's consistent with what we say about all investments, that A, it has to be goal driven, and B, it should be long-term focused. The one truth in markets is that if it's going up, it's going to go down. And if it's going down, it will go up again. And so we absolutely advocate for long-term investing and against trying to shorten time markets. So that's really good advice. So for people watching this video today, how can they contact you, Rob, and Altura?
They can go on our website, which is www.alturafin.com. There is a contact page on there that includes an email, a form to contact us, and phone numbers. They can also come via you guys as well, obviously, as our partners on this side can come to one of your team, and I'm sure that they'll put you in touch with one of our advisors to help your client.
Terrific. Thanks very much, Rob. And thanks everyone for watching today. If you've got any questions or you'd like more information to speak with Rob and the team at Altura, you can contact us here as well at Black Swan Capital. You can go to our website at blackswancapital.eu, or you can go to our email address info@blackswancapital.eu. And remember to subscribe to this video channel so you don't miss our updates and keep up to date with all matters financial for expats and internationals in Europe. Thanks very much.